I want to cover just briefly this notion of headline risk. So for those of you who may not be familiar with that term, it's a term that's thrown around in a lot of circles, not just in our world, but in the media, maybe a cocktail party. You've heard this. It's something that we manage a couple of different ways. We view headline risk as something that is somewhat noisy, in our opinion, but can have a material impact in some of the day-to-day things that we might consider for our clients. In this example you see on the screen here, it's the chart of just taking a global equity index, right? An index that tracks all global stocks around the world. And as you can see in 2024, which is what this period is looking at, it was positive, right? Almost 17% for the year. Some people may only know about the S&P 500, which did better than this, but global stocks did pretty good as a whole last year. Why I point this out is because, as you can see, it's not a straight line, right? It had some bumps along the way. Back in April, again down in August, and every month or two it had bumps because of uncertainty around geopolitical, global conflicts, inflation numbers, right? CPI numbers were all over the board. Concerns about, economy slowing. You had an unprecedented presidential candidate drop out of the race, right? You had the election happen. You had expectations or uncertainty around what was going to happen. So all these events that happened throughout the year, the market was able to climb that wall of worry, as we call for it. And it was very easy for many of us to listen maybe to the news, the media concerns, beliefs we have, to maybe take those headlines and want to sell stocks, want to sit out of the market, want to wait it out, or maybe make a decision at the wrong possible time. And those investors that stayed the course, rebalanced, managed risk accordingly, they were rewarded for having that discipline. And that's pretty important because, as we saw last year, as we just highlighted, the global stock market across the board was up, especially in the US. But if we look at 2025, it's a different tune. This is a little bit of a noisy chart, but I'll highlight what I did here. So basically, this is taking some data from our friends at Bloomberg and I did a half dozen market indices, market indexes, and just blindly and randomly took them to see what the performance has been year to date. As of a couple of days ago, the quarterly data isn't available. I took large cap stocks. We took small cap stocks in the US. We took internationally developed stocks, emerging market stocks. We took corporate bonds, and we took treasury bills. Unlike 2024, when the US market was doing very well, this is actually the international markets. A lot of people, if you talked about buying international stocks, at a cocktail party, they would have probably maybe laughed a little at you and said, yeah, that's pretty good. They did pretty good last year, but not as good as other areas like the S&P or maybe some of the Magnificent Seven, as you heard about. But overall, year to date, 9–10% about what the international markets are doing right now. Emerging markets. Had you brought this up at a cocktail party and said, I want to buy emerging markets in my portfolio, you might have been thrown out because they were terrible last year relative to everything else. And in some cases, very much negative. You have these little areas right here, corporate bonds and treasuries, positive year to date. Not real sexy or exciting, but compared to these other two areas, doing a lot better. And these other areas, the white line is the US stocks, the S&P 500, large cap stocks, and you have the small cap stocks. So again, a little bit of a reversal in 2025. Again, we're not here to say what's going to happen the rest of the year. We're just saying, had you listened to some of the headlines, listen to some of the recommendations out there that exist, you may have made bad decisions. And so our goal is trying to understand or trying to utilize rules and processes to help avoid and kind of tune this noise out for the benefit of our clients.